great to be able to tell you about what Barclays is doing in the transition finance space. So the countries and the economies that we're active in, they still need both conventional power so that they have reliable and affordable energy. They need this to be able to do their transitions. So Barclays is providing capital for both emerging and conventional energy sectors, because we want to make sure that those economies have energy security, energy affordability, and energy resilience, because only with that stable backdrop are they going to be able to transition. We have a commitment to be net zero by 2050. This is the ambition that we've set out, and we really look to deliver that across three different ways. The first is working with our clients on their transition. Secondly, financing that transition. And then third, scaling different climate technologies that are going to allow clients to actually deliver on that transition.
The transition finance has emerged as a bridge between today's carbon-intensive reality and the long-term net zero goals. How do you define transition finance, and how does it differ from traditional green or sustainable finance?
So we define transition finance as any financing activity that supports greenhouse gas emissions reductions in high-emitting and hard-to-abate sectors. And so we set out in our transition finance framework the activities and the technologies that we think are potentially eligible. We're one of the first banks to create a transition finance framework, and it's great to see that more and more are looking to do so. We include that transition financing in our target to deliver $1 trillion of sustainable and transition financing by 2030. And as of the end of June 2025, we've already done 220 billion of that. Now, the real difference to me between sustainable and green finance and transition finance is transition finance is dynamic, and green sustainable finance is a little bit more of a point-in-time assessment. And what that means with transition finance is that as we move to a more decarbonized future, what we think of transition finance today might change, because new technologies will be in place and new sort of progress will have been made in the years to come.
Well, but you know, Oliver, we're witnessing a notable shift in the U.S. climate and energy policies, particularly under the current political environment. So what changes are you seeing in the global sustainable finance market as a result of this shift in the United States?
So I actually think over the last sort of 12 to 18 months, we've seen some really positive developments in the sustainable finance market. There's been a fantastic focus on quality, and I think this is really important. So when clients are looking to do transactions, they want to make sure that when they call it a sustainable finance transaction, they can really explain why they're calling it a sustainable finance transaction. And they're also making sure that any activities that they are looking to support with sustainable finance, they need to stack up from a business perspective. This needs to be something that makes good business sense. There's no longer a space for doing sustainability, whether it's just for press releases or for marketing. That just doesn't cut it anymore. We need to really focus on what is real and show that sustainability is driving positive outcomes from a business perspective. And that is something that I really do think we have seen over the last year or so, and are continuing to see that focus on from our clients.
Turning to the Middle East, where do you see the strongest opportunities for transition finance over the next decade, especially as the region balances the energy security from one side and the decarbonization?
So first and foremost, Barclays sees a lot of potential in the region as a whole, whether sustainable or non-sustainable finance-related business. We've got a long-standing commitment to the region, and we're reinforcing that by opening our office in the Kingdom of Saudi Arabia later this year. When it comes to sustainable and transition finance, I think we're going to continue to see a lot of expansion in renewables. The renewable energy sector in the region has been a fantastic success story, hitting lowest ever tariffs, record sizes of projects and seen lots of capital coming in to support a very clear and sort of concerted effort from the governments of the region to expand that sector. We also see a lot of interest in new emerging technologies in other sectors. So, for example, food production. We're working on some really interesting projects in the food and ag space in the region, and potentially even some first-of-a-kind transactions that we're hoping will be able to get over the line later this year. But all of this is going to need capital, and that's really where, for Barclays, we want to play a role. Whether that's advising our clients on how they should be thinking about that financing, mobilizing capital across different products from debt to equity, but also thinking about the risk management that needs to be delivered to ensure that these projects can be delivered in a way that delivers the returns that all the investors involved want to. So to summarize all of that, it's a really exciting opportunity for the Middle East to be a leader across the globe when it comes to the transition over the next 5 to 10 years.